I think a lot of us, when our parents start to get into needing independent living or memory care, anything like that, financial situations are a big, big, big option.
Well, or even if they're wanting to stay in their own home
That's
and
true.
and be able to provide the care there.
Yeah.
It can be very confusing, and it's really hard to figure out what are the best financial options.
Yeah.
So today we want to introduce you to Scott Norman. He is the co-chair of the National Reverse Mortgage Lenders Association, kind of a mouthful, but also did actually the very first reverse mortgage in Texas 20 plus years ago. So Scott, thanks so much for taking your time to be with us today.
Well, Kim and Mike, thank you very much for having me on.
Let's just start with what is a reverse mortgage, because I think that in and of itself can create some confusion.
Definitely.
That's a great question, because it can create some questions and some tension. A reverse mortgage in its simplest form is a type of home equity loan that is designed for homeowners who are age 62 and over, who are looking to access or maintain their current way of life, their current living structure, and maybe even they just want to be in a situation where they would like to age in place in their current house. Mm-hmm. One thing that I would always bring up when people ask, what's a reverse mortgage, we can talk about that. But one thing that I would love to get out of the way right off the bat is that there is one misperception about reverse mortgages, that somehow or another the lender is going to take the house, that you're really selling your house to the lender. And I think that if you really hear anything on this podcast, that the home stays with your mom and dad. It stays with Mimi and Papa. Mm-hmm. That the lender at no point is going to take the house or get the house. Mm-hmm. It's really financed just like a traditional mortgage or a traditional home equity loan, mm-hmm. where the lender would have a lien on the property, but the borrowers access the home. They can access their own equity. They can stay there. They live there. And at no point is the lender going to then turn back around and access the house or take the house.
Right.
I just bring that up because that's one question that comes up time and time again.
Mm-hmm. Yeah. Mm-hmm. I think a lot of people are also probably scared that, oh, this is great, I can get $100,000 out of my equity, but oh my gosh, now I have to pay $1,000 a month immediately. Mom and dad can't afford that. That's going to be tough on them. But that's not the case either. Is that correct?
That's correct. So a reverse mortgage in a very simple way is, think about a deferred payment home equity loan. One of the unique aspects of a reverse, hence the term reverse, is that the lender pays you, and they can pay you in a lump sum payment, or they can pay you in monthly payments, or even in a line of credit. What is really unique and really fits very well for people who want to age in their home, who may be on a fixed income, is that they don't have to turn back around and make traditional monthly mortgage payments. Mm-hmm. The payments, if you will, are made when the home is eventually sold, be it 10 years or 20 years from now, whenever the surviving borrower either sells the home or maybe sadly passes away.
Right.
So in the simplest terms, is it basically you have your equity, and it's basically as you're getting payments or you're getting that lump sum, it's just sort of taking away some of the equity so that when you go to sell it, then that equity is no longer, there's maybe a different margin of the sale price.
Great point. So think about it this way. You really nailed it exactly right. So as each month that goes by, since you're not making a monthly mortgage payment, your loan balance actually rises. So think about it this way. A lot of people who are on a fixed income or who are in retirement, or as Mike said, are certainly burdened by this idea that I've got to turn back around and make monthly payments, and that might be a problem. Mm-hmm. And so instead of turning back around and making a traditional monthly payment out of your savings account, in essence, your equity is going to make its payment for you, if you will.
Right. Okay, sort of like borrowing against your equity, if you will.
Yeah.
And that's the biggest difference, is that in a home equity loan, traditional one that you take out for construction or whatever it is that you might be, or that you just need some money, you're making a monthly payment, where that's the big difference with a reverse mortgage, is that you're not.
That is correct. And so it really can be an outstanding tool for people who are looking to age in place, pay off an existing mortgage. We see that a lot. What they might do is, instead of taking out a lump sum payment, they might say, what I'd really like to do is, if you could pay off my existing mortgage, and I no longer have a traditional monthly mortgage payment, and then maybe put some in a line of credit, or maybe pull out a little bit for a new air conditioner in Texas, or have a line of credit. You really can customize it, if you will. And I think that's one thing that is really special and powerful about the reverse mortgage, is that it's customized. It doesn't matter if you're a 62-year-old couple or an 80-year-old single borrower. It really can be customized to what your needs are, not necessarily the needs of the lender or the loan officer. And I think that really can be really beneficial. And I think that's one of the reasons you've seen the popularity of reverse mortgages increase so much over the last 5 or 6 years.
So who's sort of the perfect candidate for a reverse mortgage?
Well, I think there are two groups that fit into what the ideal candidate has been. It is married homeowners who are in their early to mid 60s, and a 75-year-old widowed female. But I really think to maybe go a little bit beyond that, it really goes back to somebody who has a house that has probably a great deal of equity in it, and they're looking for different ways to monetize that home equity, because most of the time homeowners really don't want to sell their home. Now, in fairness, there may be an option that is just not going to be possible. You might need to sell your home. You might need to move in with your children. But for those that have an ability to, because of health or because of finances or whatever the situation might be, if you can stay in your home and access your own home equity without being a burden to your family or your friends, to some extent, we really start getting into the other aspect of a reverse mortgage. And that is the fact that we're talking about somebody's mom and dad. We're talking about somebody's grandparents. And so there's a real emotional tie to that. You want to make sure that you don't want to make a bad decision. And so sometimes people put off the idea of, what are we going to do with mom and dad? What are we going to do with me and papa? And so sometimes you delay in the inevitable. And I would always say, the more people you can get together, if you can get everybody together over the holidays, get everybody together over a weekend and talk about what's our real situation? What's our financial situation? What is our debt situation? What is our health situation? And it's been my experience that when you get everybody in the same room, a lot of the taboo goes away, and you really can make a much more informed decision about what's in mom and dad's best interest.
I think there's probably also a fear that mom and dad are going to borrow this money, and oh my gosh, in a few years they're going to be upside down and owe more than it's worth. But is there a limit on how much you can take out equity wise?
That's a great question. So one of the unique aspects of a reverse mortgage are its consumer protections, and there are really two. One is this is an FHA insured loan, so the federal government insured the original reverse mortgages. Years later, back in 1999, and 3 separate times after that, the Texas legislature actually put the rules and the laws of reverse mortgages actually in the Constitution.
Wow.
And so a reverse mortgage loan in Texas has as many consumer protections in it than almost any mortgage loan in the entire country. And one of them is the idea that the reverse mortgage is a non-recourse loan, which means that there is no liability outside of the home for the parents or even the heirs or the estate. That's important. The other aspect that's really important is, should interest rates go up significantly, let's say you live another 25 or 30 years, there would be an opportunity possibly that you could actually borrow more money than the house is worth, except with a reverse mortgage, the non-recourse feature kicks in. And so you could never owe more money than the house is worth.
Okay.
And so it's a great consumer safeguard, and it really protects people for what I would call a kind of what's the worst case scenario. And the worst case scenario is you're really protected not only by the federal government, but you're protected by the Texas Constitution.
Yeah.
Well, and interestingly, that leads to a great question: is, are reverse mortgages mandated or controlled in different states differently?
They are a little bit. So most of the reverse mortgages, probably 95% of the reverse mortgages in the country, are all regulated by FHA.
Okay.
Now, some states do have some specific overlays, Texas being one of them, and Texas probably has the most stringent overlays, which we're a fan of, because we really think that the more overlays, the more consumer protections that are in place, the better off it is for mom and dad. And so as long as you're in a position where you really can say, let's talk about what the facts are, and the facts are that it is regulated by the FHA, and it is really, in essence, then going to be governed by Article 16 of the Texas Constitution.
Everyone has a different situation, so this is hard to make it a blanket statement. But can you come up with an example of someone you advise, oh, no, that's something you should not do. A reverse mortgage is not for you?
Great question. So I really think when people say, well, who is not a good candidate,
Mhm.
right, Mike? So I would always say if you feel that you're going to be in a position where you're going to sell the house in the next year, maybe the next 2 years,
Mhm.
a reverse mortgage may not be the best option. But as you said, everything is very unique and everything is customized.
Yeah.
Mhm.
There might be a situation where we have a very unique health problem or a very unique finance problem. And so the kind of the common sense rules might be thrown out because we really have to look at where are we today. I can't
Mhm.
always worry about 5 or 10 years from now. I need to get over this hump today.
Yeah.
But that would be something, if we're talking about my parents or if we're talking about somebody's grandparents, I would always come back and say, it's a little bit like, when you refinance your house, think about it that way.
Mhm.
Would you refinance your house if you knew you were going to turn back around and sell it
Mhm.
in the next year? You
Exactly.
probably wouldn't. You might, but you probably wouldn't. And because you've got the burden of going and doing that. But and also it depends on it. Just there's so many situations that are customizable. I want to be careful I don't pigeonhole somebody and say, well, Scott said when I was talking to Kim and Mike that it wasn't
Right.
really in my best interest.
Right.
But it's important to know that this is not a complete advertisement that everybody should get a reverse mortgage, because I just don't believe a reverse mortgage is for everybody.
Mhm.
Now, I do believe every extended family should look at the options associated with a reverse mortgage,
Mhm.
because I think there are a lot of people that don't know about reverse mortgages. And if they had started studying them now,
Mhm.
in the next 2 or 3 years, when that might be a situation in your family, you're much
Mhm.
more prepared. You understand what it is versus what it is not,
Mhm.
and it could be really, really beneficial for you. So I think that's certainly something that's interesting, because
Mhm.
when we really see this giant difference, this World War II generation versus the Vietnam War generation, you've got a lot of different personalities and a lot of different people that really love their home. And
Mhm.
one thing that's unique about Texas is that in Texas, your house is your home. And
Yeah.
that may be a cliche, but it really is true. And it's not exactly always like that in other parts of the country, where it can
Mhm.
be much more of an asset. But this is
Mhm.
where your kids or your grandkids grew up. They play on the swing sets. It's where you make your cookies and you take them to them. There's a really emotional bond to that.
Oh, yeah.
And so I think that's something that is always needs to be considered when you're thinking about, what am I going to do? Should I get a reverse mortgage? Should I
Mhm.
get a home equity loan? Should I sell the property?
Mhm.
What am I really trying to get accomplished? And I always say, if you really sit down and you look at what is the financial situation,
Mhm.
what are we really trying to get accomplished? Are we trying to pay off an existing mortgage? We
Mhm.
see that a ton. Are we trying to do some home improvements? Are we trying to pay off some credit card debt? Do we
Yeah.
need some nursing care? It's always a good idea to put pen to paper. And
Mhm.
when you put pen to paper, it really helps make the decision much more easy. And
Mhm.
I would
Mhm.
always say, one litmus test, maybe Mike, going back to your question of how would I know a reverse mortgage is a good idea?
Mhm.
One great litmus test that I like is for those that have an existing mortgage. If you could go to them and say, if I could pay off your existing mortgage and you no longer would have a traditional monthly mortgage payment, would that make a difference in your life?
Mhm.
And to me, that's a yes or no
Yeah.
question. It may not
Mhm.
always be that way.
Mhm.
But if you say, boy, that really would make a significant difference, then a
Mhm.
reverse mortgage should be something that you really consider. If you're saying, well, no, not really, because I owe more money than that, or I'm in a different financial situation,
Yeah.
Mhm.
that helps maybe make some decisions for you.
Yeah.
So many factors,
And
and also really shows that it's very important to find somebody that you can ask these questions of and help you figure out if it's a good option for
yeah.
you.
Yeah. Great advice and great tips.
Mhm.
Scott, thank you so much for joining us today. We really appreciate it.
Mike, Kim, thank you very much for having me on.
Mhm.
So many things to consider.
Yeah. I guess the biggest thing is find an expert, find
Mhm.
somebody who can give you some good advice about this. Don't just jump into it,
Mhm.
and get some good information before
Right.
you do anything.
Right. Make sure it is a good fit in your unique situation.
Yeah. And if you have any other tips or any type of story that you want us to do an interview about, let us know. Parenting aging parents.